Hey guys, welcome to another Trade Genius podcast. Bob and Phil here as always. Guys, it looks like the worst possible outcome is the most likely outcome. What are we talking about? We're going to get into the details. You're not going to want to miss this one. Let's dive in.
Trade Genius.
Hey buddies, Bob with Trade Genius. Hey, it is holiday season and our holiday specials are running right now. Just promo code HOLIDAY. You already blew it. You missed the Black Friday specials, but this is your second chance to take advantage of some of the best pricing that we do for the year. Check us out, tradelikeagenius.com, tradegenius.co, tradegeniusacademy.com. All roads lead to Trade Genius. Check us out. Incredible deals. Thanks for listening.
So Bob, I think the market may be discounting or not pricing in what's developing in the Middle East. And I think one of the things that jumps out at me the most is what's happening with shipping prices. What do you think?
Yeah, I mean, look, the policymakers from the Federal Reserve and the Treasury, I think they thought they had a plan here, do a little yin and yang and work our way into a soft landing. And then, this activity with Israel starting in October, we got our first inklings on the shipping thing, and then it seemed to have calmed down. But I'm sensing a strategy here, Phil, from Iran that's really interesting to me. Is that look, they're in a tough spot here, and I'm not going to bore people with all the details. I'll just say that the military moves on their part, I don't think it went as planned for them, and they need high oil prices to keep funding their regime. So over the last couple days, couple really weird things happened. First of all, they unleashed the Houthis onto the Red Sea, which has been what we're going to talk about with the first shipping thing. But the second thing that's coming up is not being talked about enough, is that they actually fired missiles from Iran into Erbil, which is technically, I think it's Kurdistan, that region, but it's Iraq. But they also pumped a missile into Pakistan.
Yeah.
And I think what they're trying to do is they're trying to see how outrageous they can be. What can they provoke to drive oil prices higher is my view on that. And with that as a backdrop, let's flip over the freight rates. We told you guys we've been in shipping. See, we could be bearish and make a ton of money long. And we bought shipping. And so, and they're not giving up the ghost on this at all. And what's happening here is not in the chart, Phil, is that you got these rates popping here, but also with the longer routes, there's not enough shipping capacity to manage the supply chains. Because now, instead of a 30-day trip, you have a 50-day trip in a lot of places. And there's not enough capacity. It's screwing up all the supply chains for people, and it's not adjusted yet. And so these guys now, that's why they're jamming their rates up. They're like, hey, there's not enough boats. Rates are going up, fellas. And these guys are going to splooge cash in this next earnings report and the one after that too. And Scorpio Tankers, STNG, here's a freebie for you guys, has already taken their cash flow and destroying their debt levels. So they're going to have an awesome quarter. Now it's already been starting to get priced in, but STNG is one, doesn't pay a big dividend, can move a lot. And in an environment where you think the stock market may go down 30-40% this year, if somebody's going to give you a 10, 15, 20% pump, it's going to attract people's attention. And Phil, I'm going to throw the next chart to you because you follow this more than I do, but I think it ties into our theme here of higher costs longer. I hate the word inflationary, but the cost of living is going to remain elevated, and I think it has the Fed in a box.
Right. Well, I think that inflation is going to be sticky. We're getting closer to that 2% target rate. It's still inflation though, right? We're still stuck with the aggregate inflation of 17+% since 2000. So we're all stuck with that higher cost of living now. And they're claiming victory because it's no longer expanding. Well, yeah, thanks a lot because you printed a bunch of money and everybody got a surge of cash and drove the prices up on everything. So I think now what we're seeing is this Fed fund rate. If you guys can see on the graph here, this middle line is the maroon color, which represents the March rate cut. Now, remember, last time we talked about this, they were at like 80% I think, in terms of what they thought would be a March rate cut. Now with the data coming in and shipping rates going up, and I think potentially oil could be on the cusp of a breakout. Like you said, it's a tinderbox over there in the Middle East, and anything can disrupt oil supply. So that could possibly be going up quite quickly. So I think you're starting to see now the Fed fund rate market backing off those aggressive rate cuts they think are coming, right? I think they pricing in about 6 of them. March was all but guaranteed. I think now you can probably say that this next rate meeting we got in a couple weeks is probably going to be another hold. And now March may even be another hold as well. And I think Jerome, I think what happened in that last one and why the market went berserk was because we're kind of in that move in this market anyway with the year-end flows. So any little thing was explosive to the upside. There was just a lot of leverage and a lot of long flows compounding the gains from the year into the year end. That's historically what ends up happening. Jerome Powell says, yeah, we got to start looking at the potential for rate cuts, which is a big shift from don't think about it until we get into 2025. So it was interpreted as dovish. Probably what happened was you got a tap on the shoulder. Even though they're not supposed to be political, the administrations are going to, knock those guys over the head and say, hey, we got an election coming up. We need the market to go up. So he's going to say those things. But what was interesting was that in the subsequent days after his presser, the other Fed governors came out and said, whoa, hey, even though he said that, it's far too early to still be discussing rate cuts. He just said we should be looking at them. He didn't say they were coming anytime soon. So they started clarifying that. So I think what he did was he kind of got what the administration wanted was him to sound dovish. So he did that, but he immediately sent out the troops to kind of talk back the rate cut. So I think that's what happened there and why that, explains why the market did what it did. And of course he looked dovish, but I think he was just trying to fulfill what the administration wanted to hear and yet get his team out there to say, yeah, we can't really cut rates. Because one thing about the Fed, ultimately they are supposed to be politically neutral. So if they don't do their job and we have a surge back in inflation, which I think still is a threat, and we go to 3% or 4%, they're going to look extremely incompetent and it's going to be another policy error, and they have a string of policy errors. And at some point, the population is going to start looking at the Fed and wondering, what are they actually doing? Because so far, all they've been able to do is increase the wealth disparity in this country and stoke the flames of inflation. So they're not doing us any good. And that's a big problem for central banks because that's a bigger network of a global control type of thing. And they have to maintain this illusion that they're here to help us. So I think that's kind of a nutshell what's going on. But I think the Fed, this is telling that the Fed rates pricing in now only a 50% chance of a rate cut in March, I think tells you that these inflationary pressures are very real to this market now.
Yeah, and for me, I think inflation is well above 3% now.
I agree with you.
And I think the issue that I have is that inflation can be whatever it needs to be, because it is what it is. It's really the people's ability to afford the cost of goods and services. I think there's a gap showing there. And so even if we don't get sky high inflation, if earnings, net income does not match it, we're going to get a fall off. And I think that's part of the worst of all worlds. Is that, I was explaining to people in the room, if you can't raise your prices, you can't expand your cash flow because you already cut people, you've already cut rent, you already cut R&D to maintain your margin. If you can't do that, your margins start to compress.
Right.
And expectations are for ever increasing, expansion in margin and in cash flow. And that will cause the market to kind of implode on itself a little bit too. So you don't necessarily have to have the government in there trying to pump money into the system. You can pump money in the system and it doesn't flow to earnings too. So I just think this is going to be really interesting. I think Powell understands this completely. And I think he did the nod of the hat, and now he's off the hook. And so I think he's going to say to Yellen and those guys is that, look, we've done all we can do. It's really up to you, because what's happening in China, Phil, is that now their equity markets are collapsing and their bond yields are falling. They fell into the black hole. And you can't tell me that the other central banks around the world are watching that like, OMG, because once that happens, then it's over for the Fed because they have no more policy tools. And because you're going to get inflation every time you try to cut, and it doesn't transmit into a wealth effect for the people. And then it becomes politically unpalatable. So this is going to be really interesting to watch. I think what's happening, what we said was going to happen, Phil, we're weak this week. And I think we're going to have general weakness until end of March. And then, but we'll talk about it every day.
Yeah. So let us know what you guys think about this. Do you think inflation is here to stay or is going to be sticky? Or do you think it's dropping? What are you seeing on your end? We'd love to hear from you. Otherwise, guys, check out our stuff over at tradegenius.co. We'd love to see you in the room with us. And we will see you guys on the next video. Don't forget to hit like and subscribe. Thanks, guys. We'll talk to you later.
Trade Genius.